Good morning, friends. Welcome to the SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading session. Post a steep cut in the initial three sessions of the week, the last two sessions did see some pullback in the market. Despite that, Nifty and Bank Nifty ended the week with a cut of 2 and 2.5% apiece. Interestingly, India VIX ended the week on a relatively flat note. While profit booking was visible across auto, metals, real estate, oil and gas, and CPSE space, it was the IT index that lent support to the indices as it ended the week with a gain of 1%. Despite a pullback in Nifty Midcap and Nifty Small Cap in trade on Friday and Thursday, we feel one should not try to do any bottom fishing yet, as there is no evident signs of a bottom formation in sight. Based on the relative strength charts, Nifty Small Cap and Nifty Mid Cap indices still could underperform Nifty 50 in the coming few sessions. Even if we compare between Mid Cap and Small Cap index, the latter one is a lot weaker and is expected to continue its underperformance going forward as well. While the mid cap index is currently 6% down from its all-time high, small cap index has corrected over 12% from its all-time high. Coming to the macro factors, so if you see larger than expected rise in US inflation numbers in the past week has led to the dollar index spiking to 103.50, while the US 10-year bond yields firming up to 4.3%. Additionally, Brent crude prices too have witnessed an up move towards $85-86 a barrel. Impact of the above trio of firm dollar index, bond yields and crude prices are potentially negative from a macroeconomic standpoint and hence could get factored in the coming few sessions. Coming to the Nifty levels, while the indices are currently on a slippery wicket post a rising channel breakdown, going ahead 21,830, 21,850 will act as a crucial support from a positional perspective, that is for the index being a rising trend line support. Along with this, the level being defended multiple times. If you see in the last 3 to 4 weeks, it's also the 50-day EMA zone, that is the levels of 21,830, 21,850. Any sustainable move below the levels of 21,830 will lead to further selling pressure in the index up to the levels of 21,750, 21,680 levels. While on the upside, if we see 22,230, 22,250 will act as the immediate hurdle for the index. Any sustainable move above the levels of 22,250 will lead to an extension of the pullback rally towards the levels of 22,450, 22,530 in the short term. Overall, looking at the mixed picture of large cap charts, we feel indices could overall consolidate between 21,750 and 22,300 from a short to medium term perspective. If we look at the OI data, in the past week, Nifty futures has corrected by 2% with the rise in cumulative OI of the current, next and far series by 4%, indicating overall short build up. We need to watch the OI build up carefully in the coming week and the FI positioning to being on a weak note in the index futures segment. For the next weekly series Nifty, that is this week's series, Nifty PCR is currently at 0.79. Meaningful call writing was witnessed across 22,200, 22,300 strikes, while put writing was witnessed in 22,000 and 21,800 strikes, implying a range for the coming few sessions could be 21,780 on the downside and 22,250, 22,300 on the upside. Coming to Bank Nifty in the past 6 sessions have witnessed lower top, lower bottom formation with a clear underperformance of the PSU banking space against the private banking counters. On the daily scale, it has formed a doji candlestick pattern, and going forward 46,200, 46,300 will act as a crucial support for the index. Any sustainable move below the levels of 46,200 will lead to selling pressure towards the levels of 45,700, 45,500 in the coming few sessions. While on the upside, the zone of 47,150, 47,200 will be the immediate hurdle for the index. Any sustainable move above the levels of 47,200 will lead to a sharp pullback rally up to 47,700, 47,900 in the short to medium term. From the OI perspective, that is for Bank Nifty, significant call writing currently is seen in 47,000, 46,800 strikes, while on the put side it is majorly seen in 46,500, 46,000 puts, implying a range of 45,800 on the downside and 47,200 on the upside for the coming few sessions. Coming towards stocks and sectors in momentum, in the week gone by, if you see, Nifty IT was the only major sector which relatively outperformed. Nifty IT has witnessed strong buying momentum, especially in the large cap names such as TCS, LTTS, Persistent, showing signs of outperformance. From the broader market, if we see Ambuja, Bharti Airtel, Kolpal, HDFC, AMC, Nestle, Solar Industries, EI Hotel, Policy Bazaar, Linde India, Hindustan Copper, Dixon, Cochin Shipyard looks good based on technical parameters as well as relative strength chart. Coming to the FII DI data, in the cash market in Friday's trading session especially, FIIs were net buyers to the tune of 848 crores, while DIs were net sellers to the tune of 682 crores. Overall, FIIs were sellers for the week as well. If you see from a weekly perspective, FIIs were net sellers. FI long short ratio for index futures has dipped to 37.55 on a net basis, this as they sold 6,400 index futures. On the stock futures front, FIs has sold to the tune of 18,080 contracts, while on the options front, FIs sold 29,735 call contracts and they sold 70,755 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.